In today's video, we're going to look at the top 5 ways to tell if a trading bot is a scam. I have reviewed probably over 200 trading robots by now, as well as developed probably over 100. And because of that, I know what to look for when assessing whether or not something is real or not. And I wanted to go through some of the key points that I always look for, as it might also help you guys in your journey of picking, using, and finding good trading robots. So the first factor that one should consider is the straight line equity curve. And this is a blatant scam which you can oftentimes see on the MQL5 marketplace. If you only have a straight line going up with no losing trades in a backtest, and it's just this perfect straight line, clearly that's absolutely fake, right? Because realistically speaking, a trading robot, you're looking to win more than you lose or have a positive expected value. So essentially, when you combine win rate and risk reward, you should earn more on average from your wins and your losers, and this will balance out into a profitable system. However, there's no such thing as having a bot that wins every single time and has a positive risk reward. And that would simply make that beautiful straight line. Because think about it logically, if something really only won in just printed cash, nobody would ever sell this thing because they could just get a bank loan and make an enormous amount of money. Whereas a real trading robot is an excellent investment vehicle, but similar to any sort of hedge fund or managed funds, although the owners might trade it with their own money, you can have a good business trading it on behalf of other people to just increase your cash flow, right? So anytime you see a beautiful straight line up, something is probably wrong. And yes, maybe in the case of a martingale, you have detachments from the equity from the balance line, and that could be a legitimate system. However, if you have both the equity and the balance perfectly straight up, something is definitely wrong, and there's clearly a history reader or some sort of manipulated backtest there, and that's not going to be a profitable system long term, most likely. The second factor is the no discernible strategy. Trading bots are really not rocket science. It's just a series of rules which you give to a strategy to execute. So I view it like any investment product would usually have a series of rules, like we're buying consumer discretionary stocks, we are making loans to higher risk lenders on commercial real estate. Those would all be rules when you're actually making any sort of investment product. And a trading robot is exactly the same thing. You can simply say, we are buying the NASDAQ at 1 a.m. Platform time, and we're aiming to hold until end of day if the options data of the prior day was bullish, right? It's just a series of clear-cut rules. And if you have these rules, that's what forms a real trading strategy. However, if you're assessing a bot and it seems to be trading kind of randomly, there's no discernible strategy behind it, it might look good, but like the equity curve might look good, but you don't know why it's actually making money. That's not a good sign. A bot should not be a black box, right? Like these are not crazy advanced machine learning tools. It's just rules. And if you can't figure out what those rules are, or at least like have a general gauge, like this is the breakout system, this is the mean reversion system, you probably don't have enough information to actually make an informed decision. The third one here is ultra crazy signal or promise of results. If you ever talk to a more sophisticated investor, and we do all the time in our business, people get scared if they see 100+% returns or 200+% returns. The ideal like high net worth investor, like in our space, would be looking for a 30-40% return. Obviously, you can do significantly more than that if you use more significant amounts of leverage or even with just enough bots trading. So what all of this means, if you see developers in the MQL5 marketplace showing you a 500% return in 2 weeks, like clearly those numbers are absolutely ridiculous, right? So even in our space, which is a higher risk investment asset, so you should expect to see higher returns due to the risk premium, ultimately, you still need to be kind of apprehensive if you see like these astronomical, mind-blowing returns, and particularly if developers promise results. Like fundamentally, in any sort of investment product, you can never make a guarantee. So yes, the guaranteed results is definitely something which should make people apprehensive, right? Because although we do everything in our power to develop great systems which should perform comparably to the past data and the past results, unfortunately, like as we all know, like past performance does not guarantee future results, right? And if somebody is like trying to sell you a magic unicorn and doesn't necessarily explain the risk and that the variability of trading is a constant factor, that's probably not a great system, because there's always an element of probabilities. And a good investor or a good client is almost always understanding that, and they're looking for somebody to kind of give it to them straight. You're like, hey, this is what we're expecting. However, fundamentally, there's always a degree of variability. And that's something which can also be used to kind of filter out trading bots. Number 4 here is no developer communication. If you can't actually know who's developing the bots, which company is behind them, there's no customer support team, there's no account managers, there's nobody to chat with, like really you're not in a great spot to evaluate the bots. And yes, maybe there's some like cheaper ones out there where it's just purely a direct checkout. Absolutely, like you can, there are some good bots through that, but fundamentally it's always better if you can talk to the company and there's actually a sales team, there's an account management team that you can chat with, you can ask questions to, just because you can go really far more in the weeds if you can communicate with the developer. And finally here, if there's no track record and no company track record, it's also not a great sign. If somebody just comes out of the blue and publishes a bot with a 2-week signal, you have no idea if they have any sort of track record in the space, right? Whereas if you have a company or if you have somebody who's been around for years or for months with many happy customers, that's probably a good sign. The great example here would be like Wim is the godfather of bot development. He's been in the space for over a decade, and like he has thousands of happy clients. He's definitely doing something right. And I hope that we as well have very many happy clients and also have a strong track record. So really, these are the 5 ways to tell if a bot is a scam. If the equity curve looks too good to be true, it probably is. If you can't see why it's making money, probably something's wrong. At the same time, ultra crazy returns, like people who are going for 10% a day or something insane, is probably a bit of a red flag. At the same time, if you can't actually talk to the people selling it, also not a great sign. And finally, if there's no track record and no company information, probably also something to be mindful of. So guys, hope you found this useful, and I'll see you in the next video.